My name is Aman and I am a chartered professional accountant practicing in the Metro Vancouver region of British Columbia, Canada. This video will analyze the federal budget implications on business owners. The first budget in over 2 years, the 2021 federal budget, projects large deficits to support Canadians through the pandemic, promising to make the economy stronger. Let's talk about the emergency business supports. The Budget 2021 proposes to extend the Canada Emergency Wage Subsidy, the Canada Emergency Rent Subsidy, and other lockdown supports until September 2021. Please note that the subsidy rates will gradually decline over the July to September qualifying periods. The budget also proposes to provide the government with the legislative authority to add additional qualifying periods until November 2021, should the economic and public health situation warrant such kind of changes. The budget introduces the Canada Recovery Hiring Program to provide eligible employers with a subsidy of up to 50% on the incremental remuneration paid to eligible employees between June 6 and November 2021, as compared to its baseline remuneration paid during the period from March 14 to April 10, 2021. An eligible employer will be permitted to claim either the hiring subsidy or the Canada Emergency Wage Subsidy for the particular qualifying period, but not both. Employer eligible for CEWS will generally be eligible for the hiring subsidy. The tip here is that if you are an employer, you should forecast whether the Canada Emergency Wage Subsidy or the new Canada Recovery Hiring Benefit will be more beneficial. An accountant can help you with this. Now, suppose you own a Canadian controlled private corporation, that is also called CCPC in short form. The Budget 2021 proposes to provide immediate deduction, thereby lowering your taxes on certain eligible property. Category of eligible property that may benefit from immediate expensing is broad and generally includes all depreciable capital property other than certain long-lived assets such as buildings, pipelines, and other physical infrastructure, as well as goodwill. Accordingly, this proposal will allow CCPCs to immediately expense the full cost of many tangible items acquired in the course of business, including tools, computers, vehicles, machinery, and other equipment, up to a maximum of 1.5 million per taxation year. The immediate deduction will only be available for the year in which the property becomes available for use. You may want to plan your acquisition to optimize the overall benefit of this tax measure. Budget 2021 also proposes to introduce rules that will limit the amount of net interest expense that your business may deduct in computing its taxable income to no more than a fixed ratio of tax EBITDA. Generally, EBITDA is your corporation's taxable income before taking into account interest expense, interest income, and income tax, and deductions for depreciation and amortization. Interest denied under these new rules will carry forward for up to 20 years or carried back for up to 3 years. If you are the owner of a highly leveraged company which uses a lot of debt, such as a leasing company, real estate and construction businesses, including home builders, automobile dealerships, and farming operations, you may be negatively affected because of this new budget change. Lose the luxury and go for the green. That's the message from the Canadian government in its recently unveiled Budget 2021, which includes a proposed tax on high-end vehicles and a break on some of the costs associated with the green ones. If passed, the new tax would come into effect on January 1st, 2022. The luxury tax applies to most vehicles priced over $100,000 before taxes, as well as personal aircrafts above that price, or a boat that is more than $250,000. The vehicle tax will be 10% of its full value or 20% of the value over $100,000, whichever is less. GST and HST applies to the vehicle's final sales price inclusive of the luxury tax. Now, as part of continued effort To encourage investment in clean technology, Budget 2021 proposes to temporarily reduce corporate tax rates applicable to eligible zero-emission technology manufacturing and processing income, and it also expands the eligibility of preferred CCA regime for clean energy equipment. Make sure to discuss the tax strategies available under the new budget with a chartered professional accountant. Thanks for watching this video and see you in my next video. If you want to be notified about my new tax updates, please consider subscribing to my YouTube channel.